The Taxpert tax calculator app is designed to show us in a quick and easy way the tax and national insurance contributions that a taxpayer will have for 2 years, 23, 24, the year just ended, but also if we can input forecast figures for the current tax year, 24, 25. And the origin of this calculator goes back to the days when HMRC's own calculator contained a very significant number of errors. Well, the number of errors at HMRC has significantly decreased, but many agents tell us that they find this app useful, nevertheless, in double checking and determining the tax in a quick and easy way, and also for 24-25, which we'll look at shortly, in estimating the tax and national insurance that a client will have for the current tax year. And I'm looking first at the year just ended, 23-24. We can input appropriate figures. So there may be employment income of, let's say, 120,000. As soon as you enter a figure, straight away the tax and the national insurance comes up. And there may be property income. Well, let's just have a quick look at the property income page. I'll zoom into that a little bit. The net rental before finance costs might be, let's say, £18,000. And there may be I've put in 180, so let's just change that to 18,000. And there may be finance costs of, well, let's say quite a lot, 15,000. And of course, these days, you will only get relief for the finance costs at 20%. And we can see there a tax reduction of 3,000 will be the amount that goes into the taxpayer's eventual calculation of liability. That, in fact, will lead me straight to the next but one tab, the personal tax client report, where I can see that in addition to the tax calculated of 48,303, I have got a reduction of 3,000 for the property interest tax reduction. And that's the same, HMRC get the same figure there. So very quick and easy to check all of these figures. Let me now go back to the main input screen, and I've got there the 18,000 property income has come in from the property income page. I'll come back to self-employment income because there's an important new element to that this year. But we can also put in other non-savings income, and then gross interest. There may be 6,000 of interest. That'll take account of the savings rate band if available, the personal savings allowance, non-UK chargeable event gains, dividends, of course. Let's have 15,000 of dividends. Dividend tax rate will apply on them. And I'm very happy to say that I get 55 or 56 rather, 512, and so do HMRC. So we agree with the tax calculation. You can put in net gift aid and net pension contributions. But here, let's have a quick look at the options. If the taxpayer had already reached state pension age by the start of the tax year, then I would toggle that to yes. And you'll notice that the national insurance contributions have zeroed. So once you're of state pension age, that gets rid of the employer, I'm sorry, not the employer, the employee class 1, but also class 2 and class 4. And if you're a Scottish taxpayer, you're likely to be hit harder. Now, let me just toggle that from no to I. 56,512 if you're not Scottish. If you are Scottish, 60,000 odd. So a significant additional tax charge, and that's because 138,000 of the income here is non-savings income, which will be taxed at higher Scottish tax rates. One important new development that I've included for 23, 24 and 24-5 is the capability to enter student loan repayment figures. And if I were to toggle from no to yes, then there'll be no change to the figures on this spreadsheet. But if I have a look at the personal tax client report, I can see that on these figures with the student loan outstanding, the repayments would be 12,328, and the revenue agree with me on that figure. So significant student loan repayments. And of course, we've got a separate worksheet for student loan repayments. Let's zoom in on that. It picks up the income from the main personal tax input sheet, and you then choose which plan you're on. Plan 1, Plan 2, there'll be different figures, different thresholds, and different repayments. So that, I hope, will be a very useful additional element for those clients or taxpayers who are having to make student loan repayments. We've seen already the personal tax client report that will lead, if you input the PAYE deducted, the payments on account, that'll lead us to the eventual liability as at 31st of Jan 25 and sets out the cash flow implications for the client. Back onto the main screen, and let's just have a quick look at the 24-25 column. I had the same figures in the property sheet, so that's already populated, but there is a little widget here, replicate 23-24 income, and if I click on that, then we automatically end up with the same income figures, which is quite useful for forecasting, although of course you can amend those if you would like. And I noticed that for this particular taxpayer, who is a Scottish pensioner, we could change it to whatever combination we like, they're going to be worse off on the same income figures by £4,834. And that is because of the significant increases in Scottish tax rates this year. If we were to want to have the same net income, then I've built in a widget which will equalize the income by telling us the amount of dividend necessary to get the same income, net income, in 24/5 as in 23/4. So if I do that, it takes a little while to work through horrendously complicated calculations. That was quite fast. Click on OK. It still carries on. And then it will in a moment give us the dividend instead of the 15,000 we originally had. If we had, in fact, a dividend of, and it will get there in a very little while, 23,444, then that will give us the same net income. You can see the net income there, 78,767, same in 23/4 and now in 24/5. One very important change here is the link between the high income child benefit charge. Let's put in 2,500 of child. Actually, let's not put that in. Let's reset the whole thing to 0. Can do that very easily by pressing that widget. Do I want to reset it to 0? Yes, I do. Oh, you have to reset the property income to 0 on its own page. So we'll do that there. And if I then were to consider a taxpayer with child benefit of, let's say, 2,500, then the high income child benefit charge will be triggered if they have income for 23/4 exceeding the 50,000 threshold. That, of course, has gone up to 60,000 for the current tax year. But if I put in employment income of 55, that's halfway between the two thresholds for 23/4, and I would expect half the child benefit to be clawed back. And there it is, the 1,250. Instead of employment income, though, let's suppose that was self-employment income of 55,000. And again, I've got the high income child benefit charge of 1,250. But of course, this year is the year 23/24, that is transitional for basis period reform. And one complication of basis period reform is that the element of the self-employment income that is the transitional part, and that'll be the amount that takes us up to 5th April 24, and we have a separate app for working that out, our basis period reform app, but that transitional part is not taken into account for HICBC purposes. So if the 55,000 actually comprised, let's say, 40,000 of the standard part up to 12 months from the end of the 22/3 basis period, if that was 40, did I say 45? Let's say that was 40,000, and the transitional part was the other 15,000. So I enter that 15,000. Well, I now know that the relevant figure for high income child benefit charge will be the difference of those two. It'll be 40,000, just the standard part. And so there'll be no high income child benefit charge at all. So that's quite a useful way of checking whether or not the taxpayer, given basis period reform, will have a high income child benefit charge. And that will continue into 24/5 because, of course, that transitional part would normally be 20% of whatever the total transitional profit less overlap relief is. So if I had 60,000 there and another 15,000, let's say, of transitional, again, I would expect no child benefit charge. I haven't put child benefit in. Let's put it up to 2,600. And again, there's no high income child benefit charge. But if we didn't have that transitional element, the tax doesn't change, but the child benefit charge disappears. Well, I've rattled through quite a lot of different elements of this year's version of our tax calculator app, which I hope you'll have found useful. We've seen the personal tax client report. We include full workings. I'm not going to look at the detail with you, but that'll enable you to see where we get the figures from and double check them. And we've got the rates that are taken into account in the Scottish and the two different tax years side by side. So there you have it. I hope a very useful tool, but if you haven't already done so, download our demo and preferably buy the app. You'll find it, I hope, very useful.